As cryptocurrency becomes more popular, we're starting to see signs that it could become part of our financial future.
A little more than a decade ago, cryptocurrency was a curiosity. Bitcoin was dismissed as magic internet money, Ethereum was barely known outside tech forums, and the idea of a decentralized digital economy felt like science fiction. Fast forward to today, and cryptocurrency has become impossible to ignore. The United States, the world's largest economy, is at the heart of this transformation.
The US government started distributing GDP data on public blockchain. Arbitrum One, Bitcoin, Ethereum, Solana, Tron, Stellar, Avalanche, Pipe, and Chainlink.
But unlike smaller nations that moved quickly, such as El Salvador making Bitcoin legal tender, the US has taken a cautious, fragmented, and often contradictory path. Still, despite regulatory confusion and political debates, crypto adoption in the US is advancing through investment, innovation, and gradual integration into mainstream finance. This isn't just about Bitcoin anymore. It's about how blockchain and digital assets are reshaping payments, remittances, banking, and even government oversight.
The Commerce Department has effectively given its stamp of approval to a technology that is quickly expanding its use beyond crypto to trade money market funds and stocks.
Let's break down how America is really adopting cryptocurrency. 1. Retail adoption, everyday Americans buying and holding. One of the clearest indicators of crypto adoption in the US is at the retail level. Millions of Americans now own cryptocurrency, not just as a speculative asset but as part of their financial portfolio. Demographics, surveys show ownership is highest among millennials and Gen Z, who are drawn to crypto as both an investment and a statement of independence from traditional banking. Roughly 20% of US adults report owning some form of crypto. Use cases: for most, crypto is still an investment vehicle, Bitcoin as digital gold, Ethereum as the foundation of decentralized apps. But practical uses are rising, from sending money abroad to buying goods online. Mainstream access: platforms like Coinbase, Kraken, and Gemini made crypto easy to buy, while apps like PayPal, Venmo, and Cash App allow Americans to purchase Bitcoin alongside splitting dinner bills. Crypto isn't fully woven into everyday payments yet, but retail ownership shows that digital assets are no longer fringe, they're part of the mainstream financial landscape. 2. Corporate adoption, Wall Street joins the party. If retail adoption put crypto in the headlines, corporate adoption legitimized it. In the past few years, major US companies and financial institutions have taken big steps. Tesla famously announced in 2021 that it bought $1.5 billion worth of Bitcoin, though later sold much of it. Even more importantly, Tesla briefly accepted Bitcoin as payment for cars, sparking global attention. MicroStrategy, led by CEO Michael Saylor, turned itself into a Bitcoin holding company, purchasing billions of dollars worth. This move influenced other corporate treasuries to at least consider digital assets. Wall Street banks like JP Morgan, Goldman Sachs, and Morgan Stanley now offer crypto-related services to clients. JP Morgan, once a vocal critic of Bitcoin, created its own digital coin for institutional payments. Payment giants including Visa and MasterCard have integrated crypto payment solutions, enabling businesses to accept digital currencies and consumers to spend them seamlessly. What once seemed like a rebellion against Wall Street has now become something Wall Street wants to monetize. That's the clearest sign of US adoption, when the biggest players join in. 3. The ETF revolution, crypto enters the stock market. Perhaps the biggest breakthrough in US crypto adoption came in 2024 with the approval of spot Bitcoin exchange-traded funds, ETFs. For years, American investors were restricted to complicated methods of buying crypto directly or using risky alternatives like futures ETFs. Spot ETFs changed that by allowing investors to gain exposure to Bitcoin within a regulated stock market environment. Fidelity, BlackRock, and others launched Bitcoin ETFs that quickly attracted billions in assets. This opened the door for retirement accounts, hedge funds, and conservative investors who wouldn't touch unregulated crypto exchanges. The move legitimized Bitcoin as an asset class, making it as easy to buy as shares of Apple or Amazon. Ethereum ETFs are likely next, signaling that crypto is being stitched into the very fabric of US investment markets. 4. Government and regulation, a cautious embrace. Crypto adoption in the US has been shaped heavily by regulators, and not always smoothly. The SEC, Securities and Exchange Commission, under Gary Gensler has taken an aggressive stance, suing major exchanges like Coinbase and Binance for alleged securities violations. The CFTC, Commodity Futures Trading Commission, meanwhile, argues that Bitcoin and Ethereum are commodities, not securities. This conflict has left the industry in limbo. Congressional debate, bipartisan bills have been introduced to create a clearer regulatory framework. Lawmakers are split between encouraging innovation and preventing financial crime. The IRS requires Americans to report crypto holdings and profits, treating them like property for tax purposes. Despite the uncertainty, regulation itself is a form of adoption. The fact that U.S. agencies are deeply engaged with crypto shows that it has grown too large to ignore. 5. Central Bank Digital Currency, CBDC, the digital dollar. Beyond regulating existing cryptocurrencies, the U.S. is exploring its own digital currency, the digital dollar. The Federal Reserve has researched a CBDC that would allow Americans to hold digital dollars directly with the central bank. Proponents argue it could modernize payments, reduce costs, and compete with China's digital yuan. Critics warn it could give the government unprecedented surveillance powers over spending. While the U.S. has not committed to launching a CBDC yet, pilot studies and debates highlight how crypto has influenced even the core of America's financial system. The conversation itself is proof of adoption. Crypto principles are shaping monetary policy. 6. Crypto in payments and remittances. Another way crypto is being adopted in the U.S. is through payments and cross-border transactions. Remittances. Immigrant communities are increasingly using stablecoins like USDC to send money back home, bypassing expensive services like Western Union. Merchants. While not universal, many businesses, both online and physical, now accept crypto payments. Big names like Overstock.com and Newegg have paved the way. Stablecoins, pegged to the US dollar, stablecoins are becoming the bridge between traditional finance and crypto. Companies like Circle, issuer of USDC, are US-based and working with regulators to expand adoption. This represents practical, everyday adoption. While most Americans aren't paying rent in Bitcoin, the infrastructure is being built. 7. Crypto and politics, a growing influence. Crypto has become political in the U.S. Presidential candidates, senators, and state governors are increasingly staking out positions on digital assets. Pro-crypto states, Florida and Texas have courted crypto miners with cheap energy and friendly policies. Wyoming has passed laws making it the most crypto-friendly state in America. Campaign funding. Politicians have begun accepting crypto donations, and lobbying groups like the Blockchain Association are shaping policy discussions in Washington. Election issue. In the 2024 elections, crypto was mentioned on debate stages and in campaign ads, proof that it's entered the national conversation. The intersection of crypto and politics shows that adoption is no longer just about finance, it's about power. 8. Challenges to adoption, not all smooth sailing. Despite progress, the U.S. faces major hurdles in fully adopting cryptocurrency. Volatility. The dramatic price swings of Bitcoin and altcoins make many Americans hesitant to treat them as currencies rather than speculative assets. Fraud and scams. From FTX's collapse to countless rug pulls, scandals have shaken public trust. Energy concerns. Bitcoin mining's massive energy consumption has sparked environmental debates, especially in states with strained power grids. Fragmented regulation. Without clear federal rules, crypto companies face a patchwork of state laws, driving some innovation overseas. These challenges slow adoption, but they haven't stopped it. In fact, each crisis forces the U.S. to refine its approach, making adoption more robust in the long run. 9. The future, gradual but inevitable. Looking ahead, U.S. crypto adoption will likely follow a hybrid model. Crypto as investment, Bitcoin and Ethereum continue to function as long-term assets, integrated into ETFs and retirement portfolios. Stablecoins and payments. Dollar-backed stablecoins like USDC become the backbone of cross-border transactions, e-commerce, and even government disbursements. Regulated exchanges. Platforms like Coinbase evolve into fully regulated digital banks, offering crypto alongside traditional accounts. CBDC possibility. Whether or not the US launches a digital dollar, the research alone ensures blockchain principles influence the future of money. Crypto won't replace the dollar. Instead, it will weave itself into America's financial fabric, quietly, steadily, and irreversibly.